G'day guys, welcome back to the Devon Tuga Investing channel. Today in this video we're going to be looking into Metastock, or formerly known as Facebook, and we're going to be looking to see whether it's a good investment or a bad investment. So anyway guys, before we get into it, make sure you like this video and subscribe to my channel because I'm going to be coming out with plenty of videos on investing and the stock market. So before I make any investment, we've got to consider, what are we paying for the business? Because as shareholders, as long-term shareholders, we are business owners. And I feel like if we had the mindset of a business owner, that gives us a big advantage when trying to beat the market and just minimizing risk in general. So what are we paying for Facebook? Well, as of the last few days, it's been trading in and around the 659 billion mark, and that's how much it costs for the whole business. That's what the market cap is right now. And then it's really important to consider, what are we getting? So paying for the business is one thing, but what are we getting for that business? So Facebook's got a stellar balance sheet. It's got $48 billion in cash and cash equivalents with no debt. So just on that alone, we can subtract the 48 billion from the market cap, and that gives us an enterprise value of 611 billion. Now, if you look back to the cash flow statement of Facebook, I've pulled the numbers out for you so you don't have to go look yourself, but they produced 48 billion in free cash flow over the last 12 months. So if you take that enterprise value of 611 billion and you divide it by the trailing 12 months free cash flow of 38 billion, you get an EV to free cash flow of about 16, which is very, it's well below where Facebook has historically traded. Usually, it'll trade above 20, if not closer to 25, and sometimes 30. So at the moment, obviously, there's been a lot of negativity around the stock, and that's pushed down this ratio. And also, we're getting plenty of share buybacks. So Facebook purchased 50 billion of their own shares in 2021. So obviously, the market cap throughout most of 2021 was 900 billion. I know it hit $1 trillion at one stage. But guys, if you divide 611 billion by 50 billion, if they did that every year, Facebook would buy all the shares back in under 10 years in just share buybacks alone. Obviously, that might not be feasible because the stock price would very likely increase if they kept buying shares. But guys, that's them returning capital to shareholders. So they are quite shareholder friendly, the management team. So that's good to see. Now let's focus more deeply into the business. So the business itself, 97% of the revenue comes from advertising, while 3% comes from Reality Labs. So the 97% from advertising includes advertising on the Facebook family, such as Facebook, Messenger, WhatsApp, and Instagram. Whereas the 3% from Reality Labs comes from Oculus and their products surrounding the metaverse and what they're building out there. So in terms of monthly family users, Facebook has 3.59 billion of those monthly family users, which points more towards why Facebook's been so strong in the recent years, as this gives them multiple competitive advantages, such as a strong network effect. So pretty much the more people who use a social media platform, the more valuable it becomes. And the more of your friends that are on it, and the more people that are on it, the more valuable it is. As well as they have a switching mode. So if all your friends are on a certain platform, you probably don't want to leave that platform, because if you leave that platform, you're probably going to be going to a platform with, less friends on it. And, this sort of moat might be getting pulled down a little bit with TikTok and that sort of popularity, all that short form kind of content, even though Facebook is sort of trying to compete with that with Instagram Reels. Obviously, TikTok is the clear leader in that sort of short form. You could call it, I suppose, entertainment. In a way, I suppose the Facebook platform itself is kind of very different from TikTok in the fact that, Facebook's more for, what you could call communications and that sort of thing, whereas TikTok's just, I guess it's more for entertainment. But we've also got a question, like, where will the growth come from? So Reality Labs is definitely one area that Facebook will be investing heavily into the future. And currently, the operating margin of Reality Labs is actually dragging on the business at the moment, as it's not profitable due to heavy capex. So Facebook are plowing a bunch of money into Reality Labs, and they're not yet getting too much, any profits for that matter, from Reality Labs yet. However, this might change over time, but then again, who knows how successful Facebook's metaverse sort of progression will be. So one thing that is going for them though is Mark Zuckerberg, the CEO, and the team have an excellent track record of investing into the business. The 5-year average ROIC is 26%. So pretty much for every dollar they put into their business, by the end of the year, that will be turned into $1.26, which anything above 15% is really, really good. And 26% is insane, because let's say you get 26% return on a dollar for 10 years straight. That's going to turn into $10. So a 26% compounded return is a 10x over 10 years. So one thing we got to sort of notice is that they do have slowing user growth. And in terms of daily active users, if you look on their recent earnings report, they actually lost daily active users on their Facebook platform. However, Facebook and Meta in general, they do have pricing power, and they will and have been raising ad costs. So Facebook may not grow so much in terms of users, but the average revenue per user will probably continue to increase over time. And as well as I already mentioned, the buybacks, and in 2021 they did $50 billion worth of buybacks. So pretty much the three main risks for me with this investment. So the first risk is the metaverse. At the moment is really quite speculative. We honestly don't know too much about it, how it's going to turn out, how profitable it will be. So there is a risk of Facebook plowing a bunch of their free cash flow into the metaverse and then getting a really low return on invested capital. So this is kind of countered by the fact that Facebook have had a really good sort of track record with investing back into their own business. But then again, this is like something completely sort of left field to, their main business. Their bread and butter is advertising, and while they do have a bunch of talent at the company and a bunch of resources, this is something, that's quite a lot different from social media and advertising. So we'll see how that plays out. The second risk is the Apple iOS 14 update, and it's, whether it has a significant impact on ad effectiveness. I'm sure it will have an impact to some degree. It's just whether it's significant or, just small. And I suppose we'll find that out over sort of the next 12 months. This update has been live for a while, and so far I think it's had maybe a moderate impact, but it's just too early to tell at the moment. And yeah, we're going to have to keep an eye on that one. This third one's probably the largest risk in my opinion, and it's Facebook and the Facebook sort of platforms in general failing to hold user attention. So when it comes to online advertising and social media, it's all about being able to hold someone's attention. And right now they're losing attention to TikTok, particularly with the younger generation. And, some may argue that it's the older generation that has all the money, so companies want to advertise to the people who have the money. But the people watching TikTok right now, in 10 years, 15 years, 20 years, those are going to be the people with the money. And the people on Facebook now, arguably, they're going to be either really old, or some of them might not even be around no more. So yeah, it's really hard to gauge. I mean, Facebook has had a strong, as I mentioned, they've got the maybe a weakening switching moat, and they've definitely got a networking effect. So it's just a matter of I guess at the end of the day, Facebook is still generating free cash flow, and for me, it's all about the price you pay, right? So if we look here, this is my discounted free cash flow of Facebook. I've modeled it out over 5 years, and I've put some growth rates, which I think, Facebook will probably be somewhere in the 10 to 14% growth range. And this might be conservative considering that historically they've grown 20% a year. But just the fact that they're investing a lot back into their own business with the metaverse investments, and some of these headwinds that they're facing in terms of competition and the iOS update for Apple. I think 10 to 14% in that range is pretty safe. At the moment, analysts have Facebook growing at about 12% a year over the next 5 years or so. So if we come down, we have a look at the terminal multiple. I think 18 is, it's conservative but also reasonable. Historically, Facebook has traded at sort of in the 20 to 30 range in terms of a PE multiple or a price of free cash flow multiple. Facebook obviously do have that strong balance sheet. I've added in the net cash, so that's the cash minus the debt, and I've put that into a per share value. And then my rate of return, is 22%. Some will say it's quite high, but I like to have a large margin of safety because my actual rate of return is 15%. But if I aim for 22%, even if I'm wrong, I still hit my hurdle rate, and I likely beat 15%. So if we look over here, we're getting buy prices of between $183 to $212. So if Facebook drops into this range, I will be very interested in probably adding some shares. I think at this price range, a lot of the risks for Facebook are already priced in. So pretty much I feel like at that price, if it gets into that price range of 180 to 212, it is quite attractive, and I feel like your downside is minimized just by the fact that it's trading for a very cheap valuation. So anyway, guys, that's my take on Facebook. I'll be patiently waiting to see if this happens. If it doesn't happen, then it's all good. I'll find other opportunities. But if it does happen, then I'll be ready to, pounce on the stock's negativity and, use the emotions of the stock market to my advantage. But anyway, guys, thanks for watching. Have a good one. See ya.